All right, our next panel is the future of fintech. So if I could please have to the stage Lily Liu, the co-founder and CFO of Earn.com, formerly known as 21 Inc., George Lee, CEO of WeTrust.io, Lee Huo, Senior Director at Huobi, Nader Al-Naji, founder of Basecoin, and the moderator Michael Feng, co-founder of CoinAlpha.
Thank you. Hey everyone, hope everyone had a good lunch, and you know you're in for a great treat tonight, because or today this afternoon, because we have some people on this stage who are building the future of fintech, which is what this panel is all about. My name is Michael Feng. I'm one of the founders of CoinAlpha. We're a blockchain funds platform. We use a blockchain to remove the middlemen associated with traditional asset management. The first fund on our platform is our own, which is a machine learning based quant hedge fund. And in the future, we'll add others as well. But before this, I was an investment banker. And as an investment banker, you kind of have to be a student of monetary history. And one thing I learned throughout that time was that what we know today as money has been a very volatile concept over the span of times. Like, many people don't know that silver was actually the primary standard upon which people transacted from medieval times up until today, including the US, which was primarily on a silver standard. And it was only due to certain accidents of history that we moved to the gold standard, to Bretton Woods, and to what we have today, which is fractional reserve banking. And so I'm hoping that the panelists, to kick things off, can talk a bit about their projects and also what the future of fintech will look like once their projects succeed. George?
Hi everybody, my name is George, one of the co-founders of WeTrust and CEO. In my perspective, and many of you might agree, Bitcoin and digital currency can be seen as digital gold, as Mike and many people have alluded to before. However, the promise of digital currency, I believe, won't be met unless there's a parallel, decentralized financial system that mirrors or does better than the current system that we have today. So at WeTrust, what we're doing is building that parallel, decentralized financial system, products, services such as savings and lending, credit scores and identity, and insurance. And we'll kind of go into deeper detail about these concepts, but what we're trying to do is enable those on the blockchain.
Thank you, George. My name is Nader. I'm CEO of Basecoin, which is a price-stable cryptocurrency. It's like, imagine you have Bitcoin, it's a decentralized ledger, but Bitcoin, the Basecoin is always worth $1, right? Interesting concept, like why would you want that, right? Well, there's this thing called volatility, which I think a lot of us here like because the price just seems to keep going up. But it actually makes the token not very useful for day-to-day transactions, but more importantly, payments over time. So for example, you know, like George was saying, if you want to structure a loan or a salary or any kind of contract over time with a currency that's volatile, you run into major problems. Imagine, for example, you have a salary and you want to denominate that salary in, like, for example, say it's 1 Bitcoin per month. Right? Well, one of two things is going to happen, even if you have relatively low volatility. Either the price of the token is going to go up, in which case your employer wants to fire you or renegotiate the contract because he's paying you too much, or it's going to go down, in which case you're probably going to go hungry. And so really, if the volatility of a token moves against you at any point during a financial contract that involves time, either you're screwed or the counterparty is screwed. So, you know, I think that historically, as you know, Mike was saying, you know, society started with gold. It started with fixed supply. But the problem with fixed supply is that it can't respond to fluctuations in demand without fluctuations in the value of the unit. And that's where the volatility comes from. Society evolved to have fiat actually as a feature because it has an elastic supply. And that elastic supply is what gives you the stability that enables all of the most basic financial contracts in our economy. And so that's what Basecoin is doing. So it's taking the decentralized ledger technology, which is Bitcoin, saying this is an amazing technological innovation. Let's modify the rules just a little bit so that we have an elastic supply of tokens and they stay stable. So initially they stay pegged to $1. Every Basecoin is $1. In the long run, it's a basket of goods peg. And all of this is totally decentralized, and it operates like an algorithmic central bank. Lily, love to hear about Earn.
My name is Lily. I am part of Earn.com. Some of you might have known us as 21 until recently. And essentially what we are is we're a microtasking platform where you can get paid in cryptocurrency, currently Bitcoin, in the future our token, in order to complete simple tasks, starting with email. So you can think about it very simply as, for example, a paid LinkedIn, or a way that you can actually get paid to respond to a whole bunch of sort of cold email that we all have an issue with. And if you sort of generalize that, what's really happening with an email is it's a microtask, right? It's a few minutes of your time that you're requested to spend about 100 times a day. And if you think about it in those terms, and there's many different ways you can be asked to spend a few minutes of your time, and the cryptocurrency aspect of it enables you to actually monetize that. So we have a number of users who are excited about being able to monetize something like their email, which they previously were not able to. And that's essentially what we are today.
And before, I just wanted to say, I'm a big Earn.com user. This thing actually really changed. She didn't tell me, I didn't even know her before today, but this thing changed my inbox, basically. Like, this is actually really cool. So.
Well, thank you, Nader. So that's kind of for the user. On the sender side, the other side of the marketplace, if you will, what a number of people find it very useful for is, instead of spending weeks putting together a cold email outreach campaign to get, 1 to 3% of those people to actually engage with you, we now get about 60 to 80% response rates within 24 hours to complex tasks, simply because you're, putting some money where your mouth is on the other side. So it's a way of very quickly bringing some more efficiency to something as simple and as ubiquitous as really email and just communication.
Yep. Hi, everybody. My name is Lee. I've been introduced a little bit about myself earlier today on the panel as well. So I'm part of the Huobi as an exchange, the crypto exchange. And I would say if you want to get listed, go to Huobi.pro. If you want to get trade, go to Huobi.pro. So enough about talking about Huobi. So I just want to talk a little bit about my background before I joined Huobi. That's the whole reason why I got invited into this panel, because I used to run my own startup in the Fintech space. It's about quantitative trading, and then I moved. It's been up and running for 2 years, and I moved from the Fintech space to the blockchain space. I would be pleasure and honor to join this panel today to share a bit of my my experience, a bit of my thoughts about the future of Fintech.
Thanks, everyone. Maybe just on that subject, because I think the word fintech and blockchain, I think, are both pretty overloaded at this point. For those of the audience who don't know, about a few years ago, a lot of capital poured into blockchain startups that were trying to disrupt finance. And a lot of them were using something called distributed ledger technology in order to change processes at large financial institutions. So there's companies like R3, Digital Asset, Hyperledger, and Chain.com. And so fast forward a few years, a lot of them are still kind of like in the proof of concept stage, whereas this year, 2017, has really been about the rise of public blockchain protocols, and of course the ICO boom. Lily, can you comment on kind of like the differences between that first wave of blockchain startups and the current wave?
Sure. So I think what we've seen is we've actually seen a few of these waves of great exuberance followed by a winter for that specific technology. So if you remember, Bitcoin was really hot in 2013, capped out at $1,300, $1,400 before there was this extended 2-year crypto winter, which we've now obviously evolved from. 2016 was a year of Bitcoin bad, blockchain good, and that's when there was tremendous excitement amongst institutions in Wall Street around private blockchain because of its potential to, for example, clear complex derivatives in 3 days rather than 30 days, apply that to several trillion-dollar industry, and that's really valuable. And so that sort of reached its peak of exuberance, I would say, probably in 2016, maybe earlier this year. And this year has obviously been about back on the public blockchain and this explosion of ICOs in the last 6 months. Now, I do think that there is great potential and utility in private blockchain, again, because it brings tremendous efficiency to an absolutely enormous and global industry. On the other hand, the contrast between a private blockchain, permission blockchain amongst a select group of, let's say, 20, 30 actors or something on that scale, is it's incrementally very valuable, but it's not sort of the sea change that we see with public blockchain. So you can compare a little bit to, 20 years ago, there was a debate about the utility of internet, which is permissionless, or the internet, which is permissioned. Today, we have both, but I think it's fairly clear that the internet, while corporates use it, is nowhere clear in sort of global impact and global change as the permissionless internet and transmission of information. In a certain way, 10 years ago, there's sort of a replay of that when there was, again, a debate around the private cloud versus the public cloud. Private cloud is, many billions of dollars of an industry, but it's not really sort of the scale and the reach and the transformative sort of power of the public cloud. And I think that we're going to see that again with private and public blockchains. There are use cases and there's utility in sort of both applications, but it's really the public blockchain which encourages much greater participation in the global economy, which lowers dramatically the barriers to entry to start a business, as we're seeing with 1,000 token sales happening over the last 6 months, and many of these other sort of really transformative effects that we can experience, not just in fintech, but really the global economy.
Thanks, Lily. And I was wondering, Li Huo, whether you had thoughts on this, because as someone who's had a fintech startup before, you've clearly seen the evolution of the market, from traditional fintech to blockchain and whatever the future might bring. How do you see the differences between kind of like what we call fintech and blockchain today, and how do you think that will change in the future? For instance, are we going to see non-blockchain fintech startups anytime soon?
Yeah, I would love to share a little bit about that as well. So I think fintech in the past, people focusing really on the finance part, which is the fin part of the fintech. There were lots of spaces people were looking at, including payments, including settlements. In the past, because I'm based in Asia, especially in China, there were lots of new fintech startups, including Alipay and WeChat Pay and all these innovative, creative solutions that's been built in this country. And people's life has been changed, transformed dramatically. Nowadays, people don't have to carry out their wallet to go on the street. They use their mobile phones. They use WeChat Pay, Alipay to finish payments, I would say. And then lots of new startups, the one that I've been through, there are lots of difficulties to start up, to run the startup at the beginning. Especially you have to go through all the registration process, opening up bank accounts and all that stuff, really troublesome. And nowadays, if you look at the blockchain specifically, at the beginning, most of the people think that blockchain technology, it's part of the fintech, because blockchain technology has been in the world for quite some time. Actually, I heard about this world, at the early 2000. Actually, lots of people starting to talk about decentralized network, and later on transforming into blockchain, and. With blockchain technology, I think what really interests me the most, it really, like Lily mentioned earlier, it's really lower the entry barriers for lots of the greatest demand on the planet. They don't have to go through all this process to start up fintech, to start up a fintech company. And also now that we have this creative way of doing fundraising, ICO, that you don't have to go through the venture capital process to raise funding. And ICO, it's a way to really expediting the process. And when we look back in the early 2000, the dot-com period, and lots of people are lots of companies have to develop the underlying protocol before they actually build on applications. Nowadays, if you look at the space of blockchains, you look at lots of people are building on the protocol layers. Like people are still talking about Ethereum, talking about Bitcoin, how do we scale up the blockchain, the public chain, or are we doing a private chain or doing a public chain, etc. But at the same time, there are other people, the other group of people starting to build on applications. Obviously, we talk about off the stage about CryptoKitty, right? And then lots of people are trying to build funny, interesting applications on top of these blockchains, and which is amazing because everything is happening at the same time instead of at different time. So this is what amazed me the most. It's everything happens so fast in this industry. So in order to keep up the pace, I mean, in order to be in the industry, you got to learn really fast, and then you got to be open-minded to accept new stuff. Lots of people are still asking me the questions. You know, if you want to do an ICO, what do you really get? Are you getting a part of the company? Are you getting what did you get at the end? Because people are still used to getting part of the shares of the company because they feel like they own the company. So yeah, so I feel like in the future, lots of things. I mean, what we can do in the future is, you know, is unlimited. There are lots of things we can do in this space. Yeah.
Yeah, I think one of the challenges of fintech is that despite all the developments in that industry, it still cannot really transcend national borders, right? You have many different types of financial policies in each country, and you have many different kinds of fiat currencies. And then second, you have still 2 billion people in the world that are unbanked. And despite all the effort and progress that has been made so far, there is so much to do still. But yet, I think blockchain is where kind of an order of magnitude of speed of improvement can be seen. Now, many people have been trying to do lending on the internet. For example, BTC Jam, which is one of the first ones, they raised quite a bit of money. But one of the challenges that they faced was there was no credit identity, right? So if there's no carrot and stick type of approach, no reputation, then you can't get people to have the right incentives to do the right thing. So I think it's very important to have some kind of blockchain-based identity that is truly global in scale. And upon that, you can then build a kind of financial system. Because the other reason why 2 billion people are unbanked and don't have bank accounts, can't get a loan, is because there's very weak identity solutions for these people. It's not because they are untrustworthy. They are trustworthy with people that they know and that they trust, but no, the banks or the other institutions cannot have an easy way to evaluate their creditworthiness. And so then you'll ask, so how do we address the credit identity and reputation system? And so at WeTrust, what we're doing is creating applications that allow people to enjoy and want to use these applications to digitize their cash transactions. Many of these people in the world who are unbanked, it's not like they don't save and lend. They do save and lend, but in cash with people that they know and trust. So what we're doing is creating an easy solution for people to do and partake in these activities just as they are before in an easy way, but now we've digitized all these transactions and we can create identities and profiles such that in the future they can interact with strangers because they have something to lose. There's a carrot and a stick. They have a reputation that they've built, they've spent time to build. And they can take this reputation to other institutions or even the internet and lend from a stranger because we know, because there's now this identity that they've spent so much effort in building up. And so these are the things I think that are possible with blockchain because it transcends the national borders, and there's also kind of that validation aspect where you know, hey, I made a promise to pay back this much money, and on our platform, smart contracts can see that, and you can validate that.
Yeah, that's definitely a very interesting point, and I wanted to kind of like build upon something you said earlier, which is that George, that people can kind of like use this as a system of lending and credit. But I guess so we all know that prices are very volatile right now. I guess arguably you wouldn't want to lend your Bitcoin out if you can just hold it and earn 10x in a year. Maybe one question is like I think obviously Nader, Basecoin, you guys are working on a solution to that volatility. I was wondering whether maybe George, if you could kind of like talk about volatility, how that impacts what you're doing, and if Nader, you could kind of give the possible solution to.
Yeah, so one of our biggest challenges, there's many challenges, one of which is the volatility of the token, underlying token of value. People don't want to interact in savings and lending activities if the underlying is so much more volatile. You layer on the credit risk, and then you have this underlying risk of the token. then people aren't going to be using this for savings and lending and these types of normal activities. So it's so important for our platform to succeed, and we are so dependent on having many alternatives and solutions, and one of which is Nader is working on. There's stable coins, there's tokens that are backed by gold, and so there's a lot of interesting solutions, and I'll let Nader discuss.
Yeah. So surprisingly, this need is very common. You know, our inbox is full of people who are trying to make apps, and their apps don't work because there's everything they do in the app requires betting on Bitcoin or betting on Ethereum, which is untenable. And so yeah, so cryptocurrency today, you know, I think everything out there right now, almost everything, is kind of like gold. You know, it's fixed supply and it's volatile because fluctuations in demand have to fluctuate the price, right? If you look historically, right, society moved away from gold to now it's USD because it's actually an elastic supply that can remove that volatility, right? Elastic supply is the answer that central banks have been applying for a long, long time to enable all of these most basic financial contracts in our economy. It's actually one of the things that fiat does very well that's very useful for society. And so what Basecoin does is we basically, you know, we have a decentralized ledger and we apply the exact same logic to the blockchain. So what we do is we have a price, an exchange rate that's uploaded to the blockchain in a decentralized way. Bitcoin has mining. Miners validate transactions. In our system, it's very similar. We have a decentralized stake-based kind of exchange rate uploaded to the blockchain. And there's a monetary policy is the second piece that's different, which just looks at that price, and if it's above $1, it expands supply, less than $1, contracts supply, very much like a central bank. And so, you know, cryptocurrency today is kind of like gold, and we really think that we need a USD, you know, for this market. And that's really what Basecoin is trying to bring.
Cool. So I'll ask one last question, and then maybe turn it over to the audience for questions. And that one is, you know, I feel like there's thousands of projects out there. All of us are now working on the single type or the single vision for a single solution was out there. Maybe to wrap up, if you can kind of describe how you differentiate from some of the other projects out there, whether it's an exchange, whether it's a social network, a stable coin, or credit. George?
Yeah, so I think a lot of people are trying to create financial applications on the blockchain, but reputation is kind of a critical component of it. But how do you bootstrap reputation? How do you get that information about people? And so our first product is a Trusted Lending Circle, which allows people who are already partaking in these community finance type of activities to use our application, which is going to be released to the public next week, actually, at WeTrust.io. The product is at tlc.wetrust.io. And we're really excited to be sharing that with our community because it's kind of the first step in this financial evolution on the blockchain.
Yeah, from my perspective, you know, with crypto, we're really looking at some of the strongest first mover advantages and network effects possibly of any market ever. And you know, the way you kind of know this is you look at Bitcoin, right? Bitcoin software has been open sourced since 2008, and yet, you know, there's this BTC thing that's been at the top of the market, and it's only getting more kind of detached from the rest. And those network effects form around teams, I think. So you see the core dev team for Bitcoin. Whatever they say is Bitcoin, that is Bitcoin. And so for Basecoin, you know, we're kind of the first we're a huge breakthrough for stable coins. And so we're kind of the first system that actually really works. You know, the reason why we work is we're, you know, using traditional, you know, elastic money supply concepts that have been time tested for a long time, and that everyone trusts. And so being kind of this first mover, we build a network effect and a first mover advantage around our brand. You know, the Basecoin brand, the Basecoin team. And the same thing that propels Bitcoin to being kind of this universal currency, we think works for us as well. It's also, you know, it's very difficult to build Basecoin. The talent you need is very scarce, so I think that's another competitive advantage that we leverage.
So for us, you know, today, if you try to build a social network, good luck, right? Because getting anyone off of either Facebook or Snapchat or LinkedIn is virtually impossible. And so what we're going to be doing is we're going to be launching a token in January. We're going to be actually giving nearly all of it away to the community and to our users for signing up. And so it's essentially free tokens. And what we're hoping to do with that is, there's been a lot of sort of a little bit more theoretical discussion around how a token can be used to create stickiness and incentives within a network. And we're actually trying that out. So I think if it works, then it's a game change for potentially the entire industry and maybe tech more broadly in terms of using tokenization in order to build your own network effect and potentially break incumbent network effects. So I think that's pretty exciting. And then, the sort of other part of that is, within this community, all of us in this room, we're all very excited about cryptocurrency. But one thing which I think we have to recognize is that 10 years after the advent of Bitcoin, by optimistic estimates, there's maybe about 30 million people who have some amount of cryptocurrency, right? And internet terms is actually really not great. I think Facebook, after 10 years, had about 1 billion users, and here we are with 30 million users, and we're patting ourselves on the back. And so what we hope to do is, by allowing people to earn it, if you can reply to an email and get a little bit of Bitcoin, now there's potentially 4 billion people out there who can get a little bit of cryptocurrency, right? And once you have that sort of broader adoption, then there's enough of that more global network effect for the entire industry that allows us to build more interesting applications and build and sort of realize all of the many use cases we've all sort of been imagining for decentralized apps and sort of decentralized communities.
Yep. So I think for me personally and Huobi, we share the same vision, which is we're going to devote all our efforts into the blockchain space. From there, I would say exchange is just the beginning. Actually, I mean, we have a we have a more sort of business lines around the crypto space or blockchain space. We're not only going to build the exchange, but further we're going to provide more sort of in China. We provide more information as for media sites, and also we provide the wallet services. And also we just recently launched the partnership with SBI, which is the sort of the biggest conglomerates in Japan. We're going to build the localized business in Japan to serve, to serve the local business. Yep. With that, I'll hand back to to Michael.
Cool. Those were some great answers, and I think all the projects on this panel are really interesting, and I hope all of you get a chance to talk to the panelists afterwards. Do we have time for questions from the audience? Oh. Okay. Okay. So apologies, no questions, but please find us afterwards. Thanks.
So much. It's a great panel. All right. Thank you very much. Next up, we have a keynote from Eric Meltzer. He's a general partner at In Blockchain Capital. So Eric, if you could come to the stage, please.